Welcome to the Deep Dive, your shortcut to being well-informed. Today is August 1st, 2025, and we're diving deep into the latest numbers from Godrej Properties Ltd, GPL, specifically their Q1 FY26 results. Now, this report throws up a bit of a puzzle. We're seeing a record-breaking net profit, which sounds great, but booking value is actually down compared to last year. So our mission today: cut through those numbers, figure out what's behind that apparent contradiction, and really understand what it tells us about GPL's strategy moving forward.
That's exactly right. This report, it's a really crucial window, not just into, the immediate quarter's performance, but definitely into their strategic thinking. And these are fresh off the press, the unaudited, standalone, and consolidated financials for the quarter ending June 30th. They were just approved by the board today, actually, between noon and 12:30 p.m. So yeah, incredibly timely stuff.
Okay, let's jump straight into that puzzle then. What are the big headlines, the main numbers coming out of Godrej Properties this quarter, especially around that profit versus bookings thing?
Well, the big standout news is definitely that highest ever quarterly net profit. We're talking INR 600 crores for Q1 FY26. That's a solid 15% jump year over year, up from 520 crores in Q1 last year. And another key point, this is the eighth quarter in a row they've crossed INR 5,000 crores in booking value. This quarter, they hit INR 7,082 crores.
Right, that highest ever net profit definitely grabs your attention.
It does.
But the booking value, you mentioned INR 7,082 crores. How does that stack up against last year? Because that seems to be the puzzle piece, right?
You've hit it exactly. So while 7,082 crores is, a very strong number on its own, it is actually an 18% dip compared to Q1 of FY25. But here's where context is key. You need to look beyond just that one quarter comparison. If you zoom out, look at it over 2 years, that booking value shows a really robust compound annual growth rate, a CAGR of 77%. So that highlights a much stronger, longer-term growth picture that, a single quarter dip doesn't fully show.
Ah, okay. That does put the booking value in a different light. Makes more sense. But still, if net profit is way up, while bookings saw that year-over-year dip, my first guess would be maybe big operational savings, or perhaps some kind of one-off accounting thing. What's your read on what's really driving profit up, especially when total income seems to be going the other way?
You're absolutely right to look beyond the headline sales number. So looking at the consolidated figures, total income actually went down slightly by 3%. It came in at INR 1,593 crore, down from 1,638 crore last year. However, EBITDA, that's earnings before interest, taxes, depreciation, and amortization, saw a really impressive 18% growth. It reached INR 915 crore this quarter, up from 774 crore. And the net profit margin for the consolidated business also way up, 37.56% this quarter compared to 31.68% in Q1 last year.
Wow, okay. So total income slightly down, but EBITDA and net profit margin significantly up.
Yeah.
That is an interesting dynamic. What's the key? What explains that?
Right. And this is where it gets really interesting, I think. A huge factor is something called other income. On the consolidated results, other income just surged. It hit INR 1,185.78 crore in Q1 FY26. Compare that to 960.48 crore in Q1 last year. Now, this jump includes some pretty significant gains from strategic moves they made. During the quarter, the group actually acquired full control of 3 of its existing joint ventures. And when that happens, accounting rules mean they had to remeasure their existing stake at fair value, basically revalue their piece of the pie now that they own it all. That revaluation resulted in a paper gain, boosting other income. Plus, they also sold a small 2.5% equity stake in 3 other joint venture entities. That sale brought in a gain of INR 28.29 crores, which also got booked under other income. Losing that joint control triggered another fair valuation of the investments they still held.
Okay, wow. So it sounds like a lot of shuffling pieces around in their joint venture portfolio, a lot of strategic moves. What does this tell us about their core business, actually building and selling properties, and maybe their longer-term strategy?
It definitely points to a very active, dynamic approach to managing their portfolio. It's not just about new projects. And if you look at the standalone results, just the parent company, the picture shifts a bit. Standalone profit after tax was actually down significantly. INR 56.1 crore this quarter compared to a huge INR 491.32 crore in Q1 last year. And again, changes in other income for the standalone entity are part of that story. It was INR 471 crore this quarter versus nearly INR 987 crore last year. That's standalone. Other income also includes a smaller gain, about INR 1.5 crores, from selling a 2.5% stake in just one of those JVs, MEPL. So what this really highlights for you, the listener, is how specific events, strategic decisions, and accounting treatments can really swing the reported numbers, especially in real estate. You have to separate the one-offs from the core operational performance.
That's a really important distinction. Okay, let's do that. Let's pivot back to the core operations. Where are the sales actually happening? Boots on the ground. Which projects or regions really drove that INR 7,000 plus crore booking value this quarter?
Right, the operation. So that INR 7,082 crore booking value came from selling 4,231 homes. That's a total area of about 6.17 million square feet sold. And the performance was definitely boosted by strong demand for several new project launches, specifically Godrej MSR City in Bengaluru. That was massive. INR 2,426 crore in booking value from that one project alone. Then you had Godrej Majesty in Greater Noida that did really well too, INR 925 crore. And Godrej Tiara, also in Bengaluru, added another INR 470 crore.
So Bengaluru really seems to be a hot market for them right now, a powerhouse, like you said.
Absolutely. Just Bengaluru contributed over 3,000 crores to the total booking value this quarter. Mumbai Metropolitan Region, MMR, and the National Capital Region, NCR, they were also strong. Each brought in over 1,600 crores. And overall, this quarter saw 6 new project launches or new phases in existing projects across 4 cities. The total sales potential from just those new launches is estimated at around INR 8,500 crores. So a strong start.
Okay, strong launches, strong bookings. But launching projects is one thing. Collecting the cash and building the pipeline for the future is another. How are their cash collections looking? And are they adding enough new projects to keep this momentum going?
Good questions. Collections look healthy. They pulled in INR 3,670 crore in Q1. That's actually a 22% growth year over year, so cash flow from existing projects seems quite robust. And on the future pipeline front, they've had a very strong start to the year in business development. In just Q1, GPL added 5 new projects to their portfolio. These new projects have an estimated saleable area of about 9.24 million square feet. And importantly, the total estimated booking value potential from these new additions is around INR 11,400 crore. Now think about this. That means in just the first 3 months, they've already locked in 57% of their entire FY26 annual guidance for new business development. That really raises an interesting question for you to ponder. What kind of visibility does this give them for future earnings down the line?
That is pretty remarkable, hitting over half their annual target in one quarter. So beyond the immediate P&L and sales, what do all these moves, the JV restructuring, the strong BD, tell us about the company's overall financial health, specifically thinking about debt?
Yeah, connecting it to the balance sheet is crucial, and the news there looks pretty positive. The consolidated gross debt to equity ratio, it actually improved quite a bit. It stood at 0.78 at the end of Q1 FY26. That's down from 1.15 a year ago. And the net debt to equity ratio saw an even bigger improvement, dropped to 0.26. Compare that to 0.71 in the same quarter last year. So what these ratios suggest is a stronger balance sheet, that they're less reliant on debt compared to shareholder equity. That's generally a good sign for investors, right? Lower risk profile. Although, in a capital-heavy business like real estate, you could also ask the question, does lower debt mean they're being maybe too cautious? Could they be using more leverage strategically in this strong market? Or is this just prudent management given, say, interest rate uncertainty and the long timelines for projects? Something to think about.
That's a fair point, the balance between prudence and seizing opportunities. Now, Godrej Properties isn't just some standalone builder, right? They're part of a much larger, older group. What about their broader strategy? Things beyond just the financials, like sustainability. And what's the leadership saying about the path ahead?
That's a really important context, yes. They are part of the Godrej Industries Group, which has this incredible 128-year legacy. And GPL itself has built a strong reputation. They were India's largest developer by residential sales value in both FY24 and FY25. But what's quite striking, I think, is their commitment to sustainability. It seems deeply embedded. Get this. Since 2010, all their developments have been third-party certified green buildings, every single one. And they were ranked #1 globally among listed residential developers for sustainability and governance by GRESB, that's the Global Real Estate Sustainability Benchmark. They achieved that top ranking 3 years in a row, 2020, 21, 2022. Plus, they've got validation from the Science Based Targets Initiative, SBTI, for both their near-term emission goals and their long-term commitment to net zero. It's quite comprehensive.
That is seriously impressive on the sustainability front. But sometimes, for listeners focused on the investment case, those long-term green goals can feel a bit, abstract. How does the leadership connect these sustainability efforts back to the bottom line? to their growth strategy? What's their narrative?
Yeah, they seem to connect it directly. Mr. Pirosha Godrej, the executive chairperson, his comments on the quarter were quite telling. He said GPL delivered, and I quote, another solid quarter for bookings, cash flows, and earnings. Pretty direct. He acknowledged the residential sector in India has been strong, expects that to continue providing opportunities. But then he specifically highlighted their business development, all those new projects added since FY23. He put a number on it. A future booking value potential of over 90,000 crore rupees from that pipeline. And he positioned that pipeline as the key driver for significant future scaling of both bookings and earnings. So his overall message, it's one of clear confidence. He finished by saying, with a robust launch pipeline, strong balance sheet, and resilient demand, we are on track to achieve our guidance across all operating parameters. It links everything together: pipeline, balance sheet, demand, guidance.
Okay, so pulling this all together for you, our listener, what have we seen today? Godrej Properties delivered a record net profit, that's clear. But it wasn't just from selling homes. It was also significantly boosted by, let's say, skillfully navigating complex income streams, especially through those strategic joint venture moves. Financial engineering played a big part. At the same time, they are strategically expanding their project pipeline with impressive new additions, showing underlying operational strength too. And when you layer on that consistent focus on sustainability and what looks like disciplined financial management, a stronger balance sheet, you get a picture of a company trying to build for the long haul.
I think that sums it up well. Their ability to keep hitting those high booking values quarter after quarter, 8 in a row now, plus those massive business development additions securing future potential, and doing it while improving the balance sheet. It does suggest a very strong foundation. It's this interplay, isn't it, between the core operational sales, the strategic financial management like those JV deals, and this deep commitment to sustainability. It gives you a really multifaceted view of how they're creating value. So as you think about this, maybe consider how companies in these big capital-intensive sectors like real estate have to constantly balance things, balancing that immediate bottom line, the record profit this quarter, with the really long-term strategic positioning, market share growth, and building that future pipeline. What really stands out to you about how a company like Godrej Properties is trying to build value that goes beyond just the results of a single quarter, especially considering how much those strategic income moves influence this specific period?